Okay, Isam, we're live.
Great.
Okay, welcome everybody to Wall Street Reporter's next Super Stock, a live stream for December 15th. We are back once again with CloudMD. Dr. Isam Hamza, the legend returns.
Hey, Mark, how are you?
Great. So we're gonna have, I think a lot of questions for you today. So for anybody new, I know every time we have you on, our audience kind of grows like by 30% more every time more people add. So for anybody that's new to the program, what Wall Street Reporter's next super stock is about is bringing you companies which have that 10x to 100x upside potential. So these are companies that are going after three things: multi-billion-dollar market opportunities. They have multiple catalysts in place which can create value, and they're at the threshold of explosive growth. And finally, most importantly, they have a CEO that gets it when it comes to maximizing shareholder value. And I think if you watch today's presentation, you will agree that CloudMD has those characteristics. But here's what I would suggest: is you watch the kind of the presentation, the Q&A, and ask your questions to Dr. Hamza, and then decide for yourself if CloudMD is going to be our next. It's going to be beyond. It could be the next 100. Is it going to be the next 100 bagger? We're going to find out. You're close to the 10x now, so we got to see the what is the full potential. So with that said, Dr. Hamza, I'd like to kind of jump into, before we get into the news, I really want to talk about a lot of the recent news because it seems to me that you've had some key news which the market hasn't quite understood, because the stock, you see the stock has been relatively, quiet for the last month. So the market may not understand it. Maybe you could explain it so that, I think that people could understand, how, transformational some of those developments are. But before we do that, for anybody new, please explain to them what's CloudMD all about, and kind of your vision for the future of healthcare, which is what makes this unique.
Yeah, no, absolutely. I mean, so CloudMD is really revolutionizing the way healthcare is delivered. If you get anything out of what we talk about and anything regarding any of the acquisitions we ever make, the whole idea is to change the journey of the patient through the healthcare system. It's been very broken over the years, very fragmented, horrible experiences on all parts, from the patient to the doctor to the healthcare agent, the governments, and so on. And as, again, a physician and having over 100 years of medical experience on our team, we understood that broken system. We've been working on this for years, actually decades probably. So this is not a new thing that we've been working on, but we've really put something together here which is quite exciting. And the whole idea is to change the way that patient goes through the healthcare ecosystem. So instead of being very fragmented in the future, we just want that patient to be a CloudMD patient, and we take care of everything else. You're going to get concierge level experience within that system, whether you're seeing a primary care doctor, a specialist, an allied healthcare provider, whether you're an employee, whether you have a short-term mental health stressor or a long-term need for counseling, or need to see a psychiatrist, or you get an injury and we need to get you back to work. It doesn't matter. The whole point is we're going to treat you holistically, which has never been happened really in healthcare at this scale, and get you back to work or get you healthier faster, and working as a team and using technology, our own proprietary technology and platform, to achieve that. And so if you think about that, you get the buy-in from everybody. You get the buy-in from the patients, you get the buy-in from the providers, because we're empowering the providers, and you get the buy-in from the governments and the insurers and the corporations. And going back to what we were talking about, 2020 was a big year, obviously, for us. I think this was the hard year. If you think about what we've done, what we've really laid in terms of foundation and different pieces in that puzzle, 2021 is the exciting part, I think, and we can talk more about that today.
Okay, no, it's very interesting because a lot of times, again, from seeing, watching stocks from many years now, like I've seen kind of companies at the stage of where cloud is, and there's that kind of first wave, and and people get excited, but then, they're expecting the stock to go straight, up 100x right away. But usually, there is, the company the stock has to consolidate a little bit, and then the company comes in with the next wave, the real, the real inflection point. So in other words, I think what they saw in July, August, September was, like a preview, but I think so. We're going to see kind of the real inflection point happening right now, and that kind of leads me to the enterprise part. Is that one of the key catalysts? Is that one of the big things?
It is, because we put a lot of those pieces together recently. So a lot of people look at those transactions separately, like individually, and say, "Oh, you paid X multiple of this." You really got to think about it as together, a framework, and that patient now within that experience. And so that was the hard part, getting these really kind of amazing assets, amazing companies and teams together and agreeing to join us and actually, being part of it, of our company and aligned with us. And now you're going to see the fruits of the labor. Now we're going to be able to start announcing these, 7+ figure contracts with some of the biggest names in the world because of the thing that we provided, which no one else has, which is that full encompassing provide kind of provisions in terms of all the different aspects of it. So historically, if you think about the way an insurer works or the way a corporation works, they might have multiple vendors for that same employee or that same customer of theirs. And so if you're going through a divorce, let's say, and you got stress and you need some time off of work or whatever, they have one vendor that deals with that, right? So they might give you one phone number to take care of that. And then if you need counseling and long-term, mental health, they might have another vendor for that. And then if you injure yourself, then you kind of have to go through a different vendor for this part, but really your primary care doctor, if you have one, and so on and so on. It's very fractured. No one talks to each other, and they treat you as pieces, right? Which doesn't work. I mean, most physical injuries are actually very heavily mental health problems, right? Long-term. And so the fact that we can treat them holistically, take care of it for these employers and these insurance companies is revolutionary. No one's been able to kind of put it all together all at once. And so we're going to be able to start announcing some of these big things in 20. That's why I said 2021 is the exciting part. 2020 was the hard part. So you're right. There was a big move since August. I think that was a preview, hopefully.
Okay. So, so it's very interesting. So a couple of things I want to touch on. You mentioned, there's kind of a word you mentioned, it kind of just hit me, is you explained the whole patient experience. I think you used the word experience. So essentially, what you're offering patients is it's a new type of experience. It's really a new way of looking at healthcare, where they're getting the full suite, and which is going to be a very important thing for big companies. I'm going to use an example, like we talked about, like, I don't know, let's say a Facebook or, a Google. I'm using like the big guys who will pay top dollar for the whole healthcare thing. So for them to get a solution where, it's a turnkey for, they have the mental health, the physical health, the addiction thing. Now you're adding the addiction suite, patient
education, rehab. It doesn't really matter. It's not up to the patient to triage themselves, which is what we've asked them to do right now. They're not equipped to do that, and the system it punishes people for not being proactive and understanding the system. And we're saying, don't worry about it. Just talk to us. We'll take care of it. And that's kind of the point. And the example I would give is, people pay lots of money right now for executive healthcare, right? These executive healthcare firms where you sign up and they give you kind of concierge level treatment and all that. Think of that on steroids.
So basically that's going to be CloudMD now.
That's CloudMD, and so it doesn't matter if you're Joe
at scale,
Joe Blow or CEO Joe. It doesn't matter. You're going to be able to get that experience and better experience, but also we're going to be able to show the metrics of what it means, like the actual metrics of getting you back to work faster and healthier faster and reduce burden. And that's really important when you start talking to governments and to insurers and to different corporations and so on. It really is revolutionary, like I said, and the technology's there. And we've done the hard part. We put all our own we built the proprietary platforms and the technologies. We brought in all the experts and all the different firms to provide this. Those are the puzzle pieces we put together. and we're not done. We have over 50 million in the bank. We have an incredible platform and an infrastructure built out right now. And we're going to start proving to the market that you're going to see, hopefully dramatic organic and inorganic growth. We have an incredible strong pipeline still of acquisitions we're working on. And the reason that we are able to get that is because, a year ago, no one knew who we were. Definitely, we have the word out now, and people have inbounded quite a bit and wanting to join our team, which is great.
Yes. Okay. So basically, this is the inflection point. In terms of, I want to get into kind of the health tech suite. We haven't talked about. I'm going to ask about that. But so essentially, we're going to see. I think one of the big things we're going to see in 21 is that the organic revenues coming from the enterprise side. Is that correct?
Partly, yeah, absolutely. You'll see some hopefully dramatic increases there with some big contracts. And these contracts tend to be, like I said, 7 figures plus per year and multi-year and recurring, right? And so that's going to be interesting, like I said, once we can start announcing these things.
Okay, so that I think that's kind of like a key takeaway here. Is once the enterprise thing starts, that could be, there's going to be is it fair to say there's going to be a consistent news flow of new contracts coming in?
Yeah, as much as possible. The great thing about it, especially when we start focusing, again, I've been telling you guys this for a long time, that mental health, right? I said, watch this be the topic going forward. We said it's going to be holistic care and mental health, right? We don't talk COVID. We've never really talked COVID. It makes up very little of anything in terms of our company. If anything, our revenue would kind of go up post-COVID and the way we've structured things. And so it's very important to understand that when you talk to corporations and insurance companies and governments, when you start talking about holistic care, when you start talking about empowering practitioners, engaging patients, better outcomes, you get them on side, and they all want to announce things, right? Like you noticed, we just had an announcement yesterday, I think, with the government of Canada with regards to the mental health teamwork that we're doing with them and on IMD and patient education tools. Like I'm saying, we have kind of big organizations and big governments that want to promote the fact that they are providing better care for their patients or their customers. And so we'll try to announce as many as we can for sure.
Okay, and by the way, and the IMD, that's part of what I'm going to call your health tech suite.
I mean, yes, it's kind of a proprietary world-class patient education tools that is just seeing dramatic, explosive growth for us because it's so needed in all aspects of healthcare. And so, like I said, I think it's going to be pretty exciting here going forward.
Okay, we're gonna jump into audience questions in just a second. I see some good questions coming in right now. I'll ask the first one, actually. I'm going to ask the first one. DH is asking, how close are we in terms of getting 7-figure enterprise deals? In other words, when does the first one happen, and how long will it be before we see the second one announced? Because we need to see tempo. The market needs to see a tempo.
I can't give timelines, but I can just tell you that there's a reason we did everything the way we did it, and there's a reason that we are incredibly aggressive with what we've done. And what I would say to you is that it's if people are trying to time things in terms of the market and so on, that can be sometimes dangerous because again, we will announce when we can announce, and it's an exciting time of the year.
Yeah. Okay. So I guess this Cassie is. I think this is what you're trying to say, right? Treating people. Okay, not just the problem. So, okay. So,
yeah, but that's exactly it. I mean, that's historically what's happened, right? You treat a problem, right? You treat one issue. Oh, you have, your right shoulder hurts. That's just because your right shoulder hurts. It's not. I mean, it could be many different things. It could be ergonomic. It could be mental health. It could be the way you do stuff. And it becomes a chronic disease, and then you need counseling because you back off of work and you're unemployed and so on. So you have to treat the person holistically for sure, and that's the new way you're going to see it. Hockey stick, yes, exactly. I don't think Mark knows what a hockey stick is in the U.S. there, but the analogy I always make is absolutely hockey stick, but I still think we're in that blade right now. We're just kind of turning that corner in that blade right now.
Okay. Yeah, things are at the inflection point. So let's see here. We got I want to okay, one thing before we started the live stream, we were kind of like chatting a little bit, and you said that you were in the stock market like since you're like 18. So
Mhm.
so that's been like basically 3 years now. Because you look like a young guy. So.
Yeah.
But I think one of the key things, right, is here's what I'm trying to understand, which I think is probably what institutions that you talk to a lot of institutions now, and I think they're probably trying to wrap their head around like what is the proper valuation here for which is essentially a new model of healthcare because
Right.
there should be a premium attached to it. I mean, like cloud is still trading at a discount compared to a lot of the peers,
Sure.
because you got the health tech component which ties into telemedicine. You got the kind of this transformational healthcare.
Right.
What is there is a real value add here, or the alpha component, whatever you want to call it. How should this be valued? Because it's really a new model.
It is a new model, and I think it's even a more lucrative model than a pure SaaS play or a pure roll up. And you see those two kind of companies exist. You might have like a pure platform play, SaaS revenue for practitioners, and they have a hard time with customer acquisition costs and so on. And you got the pure roll up plays that just try to work on the numbers and get it at a certain multiple and trade at a higher multiple and keep raising money to do more roll up. That's people can go for that. That's understandable. That's been around forever. We're talking a new way of delivering healthcare that is much bigger than either one of them by themselves or even together. And the reason is because there's incredible value of not only retaining that full revenue stream from all aspects of the healthcare team, from the patient to the practitioners to the providers to the the whole scale. But once you start showing the metrics as well in terms of the savings, you get much better numbers. I think you're going to see in terms of multiples, but the efficiencies that we're going to be able to show as well, and those metrics, I think is going to demand much higher numbers as well. And it's much easier to grow those revenues than a pure SaaS play, let's say. And so this is something you're going to see. Number one, a reevaluation of the way it's the multiples in it. But you're also
expansion. We need to see the multiple expansion.
Yeah, but you're also going to see traditional players. Let's say for instance, like the teledocs, and they already have started this already. The pure kind of tech plays and all that, moving down in that space where they're trying to do the full
ecosystem. They're moving into the bricks and mortar.
Yeah, and you're going to see the Amazons of the world and the Apples and everything else as well. So you're going to see the tech players coming down here because they see that reason to do it, and you're going to see that really soon, I think, and that's going to be a big boost to the space because you're going to see consolidation. They don't tend to do this organically; they tend to acquire players in that space.
Is that a hint? Is Amazon, I asked you before, I like to make a joke about it, but it's not really a joke. It's like, you never know, right? I mean, could Amazon buy cloud? Why not?
Yeah, again, Amazon is, I put that name out. But Apple and there's a bunch of different ones out there. They're going into healthcare for a reason. It's a huge space.
It's kind of the one thing that they're missing, really. I mean, Amazon is
the most lucrative space, and it's untapped right now, right? It's just massive opportunity there for sure.
Okay. So I think what's interesting is so I'm gonna take it from this angle. Is what will be interesting for one of these so-called tech players, if they're looking at cloud, one of the things that you have is not only do you have the bricks and mortar, the actual, the doctors and all that service, but you also have the health tech suite, which is
and the data, and we have a ton of data, right? We have 8.5 million patient charts. We have I can't remember how many thousands of providers now. I think 4,000 providers directly and probably tens of thousands indirectly right now on our platforms. That's extremely valuable. It's all rich data as well. So those are what I mean by rich data. For instance, is if I'm a provider, if I'm a family doctor, let's say, I can search my whole database right now of patients and find all my diabetic patients that are on certain medication or are not well controlled and should do better. And so I should call them in and help them, or look for a combination of different lab results to find patients that could do better on a different medication or something like that. So that's all rich data that is extremely valuable in the long run for many reasons. That is much bigger than this episode today.
Oh yeah, no. This is again, we've talked about this before. Whenever I've had like CEOs of companies on who have like access to a lot of data, I always use the analogy. This is like, it's sort of like, you're buying a Texas cattle ranch. You're paying, I don't know, a little bit of money for the ranch and the cows on a couple of acres. But what you're really getting is you want the billions of barrels of oil that are beneath the ground. So the billions of barrels of oil, that's the data that you have. If you have 5 million patient charts, that could be, you can leverage that into revenues for drug discovery. There's also drug discovery
data. There's a lot of things you can do. And bringing in the patient there. So I'll give you an example.
Pure margin also, we should say.
Yes, yeah, absolutely. It's almost 100% margin, yeah. The way I explain it is this, because it's also a delicate topic. Imagine being a CloudMD patient in the future, right? And you own your data, right? That's, again, something we believe in here. And we allow you to opt in or opt out of anonymous studies in the future. So you might be a patient in our system. You can toggle on the app whether you want to be part of anonymous studies or not. And what that means is that they'll compensate you for it as well. So a lot of these pharma companies might compensate you for being part of these anonymous studies as well. So you actually may make money off your own data, which is unheard of in the data space as well. But you're seeing more and more companies start to do that. And the reason for it is the future of healthcare analysis requires data. And it's been very hard to get so far.
You have a scale. If you have 5 million,
a million or millions.
You're catching these people. They're actually.
Imagine, because right now the reason a lot of medications fail is they only test it in a very small subgroup of patients, demographics, right? But imagine if you have access to 1 million patients of all different types, and some of them are on the medication 1, and some are on medication 2, and you can run kind of bigger studies saying, okay, which one's getting better outcomes and stuff like that. So that's really exciting for me as a doctor, thinking about kind of the future of how much better we can get in terms of analysis and treatment options.
Okay, so let's talk a little bit more about, and so we could probably see, can we see revenues come in from this data side like in 21? Is that going to be one of the initiatives?
Yeah, again, one thing you need to understand about our company is that we don't do things, in sequence kind of thing. It's not like we got to do this and then we got to do this. We're working on all aspects parallel right now. And so that's why we sometimes see a ton of news all at once and we're trying to time out the news and so on. We are working on so many things together at the same time. So that's why it's pretty exciting going forward.
We got a bunch of people asking about uplisting, TSX, NASDAQ, all that stuff. What's
yeah, we're getting it to a different kind of, becoming a different kind of company. We uplisted from the CSE to the TSX Venture. Quickly outgrew that. We're definitely going to be uplisting to TSX and the NASDAQ as well. And so those are on our radar as well. And again, like I said, we don't wait for one thing to do the next thing. Those are things that we already started the process for. And so, hopefully, like I said, 2021 will be exciting. And I think we'll be a different company at that point.
Okay, no, that's very interesting because I think, listen, if you're a NASDAQ, then all of a sudden there are more comps, with the teledocs and the other,
Sure.
I think there's people who say, oh, if a company goes on NASDAQ automatically, they uplist, the stock. It's not really true, but I think in the case of certain companies, if you have that already built-in audience of people looking for that type of stock, the health tech, healthcare, you have all of a sudden a massive pool of potential buyers opens up.
Yeah. And the audience is much bigger. The audience is much bigger in the U.S. right now. I think we probably north of 80% of all my calls, my institutional calls and investor calls are U.S. Based right now. So there's definitely a ton of interest on the U.S. side. Okay.
I think one thing we got a couple of people asking about, we got the usual question, how does Doc compare with, the whole gamut? Tell us, the whole alphabet of companies in Well, everybody.
We don't try to compare ourselves to too many companies because we're really doing it a different way. And we're starting to see other companies start copying pieces of what we do, which is fine. It's flattering. But this is many decades in the making as well. But there's really no real one comparison of the way we've done it and the hard work we've kind of put into the way we've done it. Obviously, for multiple sakes, sometimes they'll use multiples of a peer, whether it's Well or whether it's Teladoc or whether it's One Medical and so on. But we're not exactly the same as any of them, really. So we're kind of forging a new path here, really.
And I think one of the key differentiators is the health tech suite.
We own everything.
I'm calling it the health tech suite. I mean, what are you calling your health tech sort of?
Yeah, it's the whole platform. We own everything. Again, the reason CloudMD came to existence was dealing with third-party vendors that were just not interested in innovation or integration and so on. And so as a policy in the company, we own all our own technology. We built everything in-house. We're turning on our own features. We're very nimble and we can add more things. We don't have any joint ventures or revenue sharing right now. And I think people would be surprised at how powerful our platform is and how extensive our platform is, to the point where, major competitors might be using it as well. So it's one of those things where I think it's interesting that the reason we did it the way we did it was because we are in control of our own destiny, and without the technology, you're only just another roll up or whatever, and you're building your whole business on something you don't own, and that's very fragile. And again, this is something we built over a long period of time, really paid we had a lot of pain and struggling kind of working it through, making sure that it works properly and it's very intuitive for the practitioners and the patients and so on. So it's not just turning on one feature or another feature. There's a reason for it.
Okay. It's an interesting comment. So healthcare cubed, or the Tesla of healthcare, I like to say.
Yeah, that's I think what you all say.
Okay, so we're going to get into audience questions, please. If we get a lot of questions coming in, Dr. Hamza, I'm going to ask you just if you can give us before we get into any more audience questions completely. I'm going to turn it over. Just give us just an overview of the health tech platform, because you have multiple components now. Just give us like a quick summary of the different.
Yeah, that's going to be tough to do as much. I'll try to as much as possible. So we have our EMR on the Canada side, which is an electronic medical record. So it's what the doctor uses when they type in your notes when you're seeing them in the office. So we own that platform. It's called Juno. It's used by about 376, almost 400 clinics across the country, almost 3,000 providers. We have about 3 million patient charts within that database. And so it's quite extensive. And then we built on top of it and it fully integrated into it a fully automated billing solution that's kind of an award-winning billing solution that, again, takes away the need for doctors to worry about, the day-to-day billing aspects of it and the automating a lot of different things. We have the patient portal built into it again, so that it takes care of so many different things, from online booking, so you can use that one app to book an appointment in real time, get instant confirmation, automatic reminders, secure chatting, has a bunch of different things. And like I said, we'll keep turning on different features on it. So that's on that part of it. We have a standalone telemedicine platform called LiveCare, and a lot of companies around North America are using that as a standalone if they already have their own EMR and they just want a secure, proven solution. We have that. With LiveCare, we also have the kiosks, so where they have like the stethoscope and the Bluetooth stethoscope and otoscope and so on, so that remote communities and, let's say, First Nation communities and so on, oil rigs, can have the ability to have a doctor thousands of miles away examine in high definition that patient. We have Snap Clarity, which is our mental health app. which is again proprietary and revolutionary. And I would encourage anybody to download it right now, try it out, answer a bunch of questions. They'll give you a mental health platform, dashboard, and then you have the ability to connect to one of 1,500 therapists across the country that we work with in our team. And so then we also have on the US side something called benchmark systems, which uses kind of, again, AI automation tools and patient engagement tools and so on. And that's another 1,000 practitioners, and again, another 5.5 million patient charts in that system. I'm missing probably a few things because, oh yeah, we have IMD, which is our world-class patient education tools. And I'm probably missing 10 other things, like I said, but the great thing about it is they're all amazing, and they all kind of work together immediately with all our other services and offerings.
Okay, so that's, I mean, again, and so that is a key differentiator, adding to the quality of service and the ability, ability to scale everything else. So let's go into, we got Jay Thibodeau asking, how do you end-to-end concierge service multi? I guess he's asking about global domination. What are your plans for global domination?
We do have inbound quite a bit over the past year and more so lately with regards to expansion overseas. And again, like I said, our main focus right now is North America as a primary business model, just because it's a massive space already. It's $4 trillion. We want to make sure that the resources we have are used properly and focused on that, so we can get this rapid growth. It doesn't mean we won't have announcements with regards to partnerships around the world, for sure. It is things that we do have connections in different parts of the world. And again, if the opportunity warrants it without distracting us with our main focus, then definitely we're open to it.
Okay, we got Dwight asking. He's asking you. I'm Jack. I guess he's asking, in terms of online medical records, any insight on how family doctors will transfer those records to the cloud?
It's already in the cloud. So the 8.5 million patient charts we talk about, they're already all rich data in the cloud. So there's no transferring of those records. They're already there.
Dr. Hamza, you see this question here? We got Jake is asking about will CloudMD, I guess, eliminate the coding? Is that what that would be?
Yeah, no. So the hospital systems are a little bit different. I mean, hospitals in general, if you notice, we don't announce a lot of. We're really focusing on the community. Hospitals, there's very long lead times. There's a lot of bureaucracy involved. There's a lot of other things you have to understand, and so we don't tackle the hospital system much. There might be further news on that in the future, but right now our main focus is community, basically, which is massive on its own, and actually, to be honest with you, probably much easier to grow much faster because you're not dealing with bureaucracy and a whole bunch of other issues.
Okay. Mental health is the future. Looking to okay. So it seems like you're making you do spend quite a bit of time talking about, like, Snap Clarity, the mental health component. How big is the mental health going to be?
Massive.
Part of your revenue picture?
Yeah, it's going to be very. Well, again, we're separating revenue. I want to talk almost holistic revenue kind of thing. The same we talk about holistic patient, because that same patient that we might be treating physically and virtually, we'd be treating it for many different things as well, and they may be engaging in other tools and other services of ours. So it's kind of holistic revenue we talk about. But the mental health part of it, I think we went into telemedicine saying that, and this is again years and years and years ago, saying that mental health was going to be the great driver for that, right? And all that COVID did was speed up that considerably and magnify it considerably. And so you're going to see probably the main focus going forward around the world are the outcomes of COVID, not physically, but mentally. And so you're starting to see that now. You're starting to see some publications coming out, but our main focus has always been, don't forget about mental health. Make sure you provide this holistic care to patients, and we don't carve them up and so on. So you're going to see a lot of news on that aspect of it. Revenue, absolutely. And the reason revenue is dramatic in that space is that it's typically underserviced, but also it's very much in favor right now in terms of governments and corporations spending money on it, because it's in their interest to, number one, make sure that patients are healthy and working and back to work and so on, but also optically, governments and corporations and insurers want to make sure that they're showing their customers and their patients and their employees that they care about them. And so you're seeing a lot of news on the mental health aspect. So the contracts tend to be very big.
You know, it's interesting. I mean, it's sort of like you mentioned the COVID having an impact on mental health, and we've seen, a couple of, a kind of high profile cases, in the US, we had the guy from the Zappos CEO, he died. I mean, it was related to, I think he got into like addiction and everything. It was something like, it was a very kind of sad situation, but it was kind of related to the COVID, because I guess he was a very social guy, and all of a sudden he's cut off from his, you had this other guy in LA that was a Stephen Bing, who was also very, again, these are like billionaires, and they're basically dying because
I think we are only seeing the tip of the iceberg with regards to the impact of COVID on mental health right now. Like, it really is just just the very early stages of what the impact is and what we're going to see, and unfortunately for all age groups, and that's why a lot of governments have tried to get kids back to school, not because they learn better at school, which they do, but because of the social interaction and the mental health aspects of it. They need that social interaction.
Okay, I want to. I think we're running kind of late. I want to see if we can wrap up with a couple of key points. We got to have you back on next week, because we're going to need a full hour probably. Okay, so DH is asking, can you elaborate on the recent partnership deal with Save-On? I guess this would be the telemedicine kiosks. Can you explain? You announced this.
I can't talk more about numbers right now or the details of it. Just that they've expanded that relationship considerably. The future of, and I've been saying this for a long time, and I think we started talking about this, I don't know when we started with you, Mark, but I started talking about the future is going to be Amazon coming into the space and start delivering medications to their Prime members. They announced that, right? So Amazon announced that they're going to start, you send in your prescription, and they'll send you their medication, maybe even at a discount if you're a Prime member and so on. So the future of the pharmacy business is not the legacy brick and mortar. It has to be e-commerce. It has to be convenience. And so you're seeing a big push from the big corporations, the big chains, working with companies like ours, basically making sure they have an e-commerce presence. And so you're going to see, much greater partnership on that aspect of it, and the ability for their millions of patients that they have to see doctors and get a prescription delivered and so on. They want to retain those patients within their ecosystem. So that's the partnership there.
Okay. So I mean, again, it's another key component. We haven't talked about the kiosks in a while, and that's a huge aspect. I want to actually ask you about. I think maybe we'll have time for just a few more things. I want to ask audience questions. In terms of the M&A pipeline, we haven't talked about M&A. Today we've been talking mostly about the massive organic growth opportunities, which is going to be that what's the hockey stick, the stick part, not the blade, the stick part now.
Yeah, now we're getting past the blade a little bit. Yeah,
we're going to move towards the handle. So what's in the pipeline for M&A in the coming months?
We have a massive pipeline right now. Like, it's we are extremely well funded. Even with the money that we have right now, we have the opportunity to add considerable revenue to our bottom line with our working capital that we have right now. We have over 50 million in the bank, and we've been getting millions of dollars worth of warrants being exercised. Probably part of the pressure might be those warrants coming in, possibly, but that's bringing in millions of dollars into our company. And so we have we don't talk numbers in terms of the size, but I'll just tell you that it's actually, I can't tell you numbers, but it's very, very big.
Massive.
Yeah, it is massive. Yeah, 100% massive, absolutely. And the reason I don't want to talk numbers is because I'd rather kind of make sure that we show the value of what we're bringing in, and hopefully exceed expectations going forward.
Okay. We got David asking, when will you become profitable?
Yeah, I think we are careful always to talk about growth and how fast we're growing and so on. In our presentations, in our, I think with regards to the consensus estimate, they have us down as being profitable in 2022. Again, with the acquisitions we're making, they're all already EBITDA positive. Hopefully we'll see it a lot sooner than that. But right now we're guiding people to the consensus assessments.
Okay. I mean, I think, again, like, as you know, speaking from like a market perspective, I don't think, NASDAQ investors, the market really cares about profitability. Right? They're not, they want the growth. They're paying for growth. It's a growth story.
I mean, again, like you said at the very beginning, I've been in the market since I was 18 years old, and they're Google and Amazon and so on, when they're growing, they were losing a lot of money as they were growing the client base, right? The customer base. That was all.
The stock just kept going up and up and up and
that's
up.
all they cared about initially. Market penetration. Yeah, market penetration. They'll turn on that switch to get profitability once they get a certain size, and when they did, you saw the explosive growth. That's what we're talking about right now, is getting just a massive footprint, really be leaders in the space. And then you'll see kind of the profitability explode from there because of the numbers that we have in terms of patients and doctors and providers and the full ecosystem.
Okay, so we covered the M&A part. What else can we expect? Is there any big announcements we can expect before the end of the year?
You have a great way of asking the same question kind of different ways.
Yeah.
No, I can't go into what we may or may not announce in between now and the new year, or in January, let's say, but it is exciting times. And I think I want to thank, our investors, that have really hopefully enjoyed the ride, but hopefully will continue to enjoy the ride going forward in 2021. 2020 was the hard part. I think 2021 will be the fun part. And it's going to be exciting times. Like I said, now you're going to start seeing the fruits of our labor. And again, I can't give you a timeline, but I'll just say stay tuned.
Okay, so the key takeaway from today is we're at the the real inflection point.
Yeah, 100%. Yeah.
I'm going to ask you again our favorite question. You've answered this before, but again, it's been a month, so maybe things have changed. In your opinion, top 3 reasons why investors should consider CloudMD stock today?
Again, a revolutionary way of delivering healthcare. It's really disrupting the system. It's not just another roll-up play or traditional pure SaaS revenue play kind of thing. It really is disrupting the way healthcare is delivered, quite revolutionary. And it's backed by, I'm not going to go through 1, 2, 3. I'm just going to say a bunch of things. You can put the numbers to them. It's backed by over 100 years of medical experience, so we understand the space quite well. And it's been de-risked quite a bit. So the risk you had a year ago is not the risk you have right now, let's say, in the fact that we're well funded. We have a solid base of infrastructure. We're well diversified in terms of shareholders, including significant institutional shareholders from all over the world. And we are having an amazing pipeline organically and inorganically that we're working on. And so it's a different company than it was a year ago. And I'm sure there's 3 things in there that I mentioned.
Okay, excellent. On that note, Dr. Hamza, I want to thank you. I want to have you back as soon as possible because we're kind of out of time. We're going to have a lot of questions. There's a lot of questions we didn't get to. I'd like to get to. So hopefully we'll have you back on the next 10 days, depending on your schedule.
I'm around.
Fantastic. Okay, thank you again. Thank you, everybody.
Thanks, guys.
Thank you, guys. Okay, let's get ready for our next presenter. Thank you for standing by. Let's get ready for Peak Fintech. Hang on 1 second. Let me just get, again, we're only looking for 10 baggers here. Okay, so we go Peak Fintech. Let me just pull up this banner. We'll get the CEO on in a second. Okay, let's see if we have Johnson.
Hey, Jack.
Bonjour.
How you doing?
Fantastic. Très bien, ça va?
Ouais, ça va bien et toi?
All right, I'm just going to practice my French with you a little bit today in beautiful weather in Montreal. But we're not going to be talking about Montreal. We're going to be talking about China. So let's China fintech. Okay, let me just get everything ready here. I'm going to get things ready on our screen. Johnson, can you just lower the camera just a little bit? I want to get more of you in the frame. Perfect. Right.
Okay.
Okay, hang on a second. Let me just get.
Are we live?
We're live. Yeah. We got 700 people on YouTube. There's probably like 500 others on Periscope, and a couple of others. So we have big audience today. They want to know.
You're a popular guy, Jack.
They want to know. No, yeah, they're here for you. They're not here for me. Believe me. I could tell you that much. We're gonna have some. Okay, so today we're going to have some interesting things to talk about. We've got a lot of questions coming in. Okay, fantastic. Okay, so let me get. Okay, we got Mr. B is saying that Peak is going to be his first 100-bagger company.
Are we starting with the audience questions already, or?
No, we're gonna go with that. I'm gonna do the introduction. We'll start right now. So, for anybody that's just tuning in now and for later. So, okay, well, welcome everybody to Wall Street Reporter's next Super Stock live stream for today, December 15th, 2020. Back with us once again is Peak Fintech CEO Johnson Joseph. And today we're going to learn all about what's next for this exciting company. The stock has made a big run. We're in a little bit of a consolidation phase right now. We're going to find out if this is going to be our next 10x or 100x winner. It's already up, 300, 400%, which is like a little appetizer, so a little preview of the possibilities. And again, for anybody that's just tuning in, our goal with next Super Stock live stream is to bring you companies which, again, they have that 10x to 100x upside, and they're going after, there's three things that they have in common. They're going after big multi-billion-dollar market opportunities. They're at key inflection points right now, right before that massive growth, and they have multiple catalysts in place which can ignite that stock price movement, value creation. So today we're going to ask, you're going to have an opportunity to ask the CEO your questions and decide for yourself if Peak Fintech is going to be that next 100-bagger stock. So that said, Johnson, let's dive into all the recent news. It's been I don't know, I think you were 2 weeks since we last had you on. You've had some interesting developments.
It's been 2 weeks. Yeah, you know what? There's been a lot of news since the end of the third quarter, end of September. There was a flurry of announcements, and we've gotten questions from shareholders just trying to understand what everything means, right? They're having trouble keeping up with everything, all of the activities that have been going on with the company since the end of September. So we put out a corporate update this morning, just kind of like summarizing some of the more important events that took place since the third quarter ended. What I wanted to do today with you, Jack, is I wanted to kind of like just go over some of the important elements and really tell the audience how everything ties in together, right? I mean, we made announcements about the financial center in Jiangyin, deals with distributors. We're buying technology software.
The AI deal.
What's that?
The AI deal.
The AI, exactly, right? So people are like, okay, how does all of this fit in, right? Well, this is what I wanted to discuss here today primarily, is everything that we're doing is centered around the Kubler Lending Hub ecosystem, right? So what we're doing in China is we're building this nationwide ecosystem where small businesses get together with lenders and they conduct credit transactions, loans and credit transactions. Now, there are different components to the Lending Hub ecosystem, and each of the announcements since the end of the third quarter, plays a key role into building that ecosystem. And that's what I wanted to discuss here today. So
you know what I'd like to do? Just for anybody that's new, we got a lot of new people right now watching. In a snapshot, just to explain, what does Peak Fintech do? And of course, we should mention the revenue run rate. I will start off with that because it's impressive.
Right. Well, in a nutshell, what we do is we have a platform called Cubular Lending Hub, and that platform is at the center of, call it the Lending Hub ecosystem. And what the platform does is it pulls data from small and medium-sized micro companies as well. So it pulls data from their accounting software, from various sources, public information, private information. They give us access sometimes to their bank statement. All of the information that a financial institution would want to have access to in order to make a credit decision as to whether or not to extend credit to the small business. We have access to all of that information in real time, right? So the information flows into the Lending Hub. We analyze that information. There's an AI component as well. On the other side of that of the equation, we ask the financial institutions, the banks, to enter their criteria, right? Whatever it is that they're looking for, whether it's a particular, whether it's a business that does that operates in a particular industry, they're looking for a specific profit margin, cash conversion cycle, whatever, right? So they enter their criteria, and we essentially match the right the right lenders with their ideal business candidates, right? In order for them to extend loans, we match the two together. Whenever there's a transaction that happens, we charge a fee, essentially. So that's Peak in a nutshell. So that's what we do. Now, you have a question?
Yeah. Just because I think they need to know that you're doing, what are you doing? $60 million run rate right now with this.
Well, yeah, like, I mean, we started in 2018. We had 1.6 million in revenue. In 2019, we scaled that up to 11.7 million. This year, we had forecasted 40 million in revenue, and we're on pace to exceed that forecast. Now, we haven't put out any revised guidance yet. We will likely do so in the coming weeks or in early January. So, so the guidance that we're going to put out will exceed the forecast that we put out for this year. So we fully expect to make over 40 million in revenue for 2020. We had our third quarter number was slightly above 15 million. So we're on quite a run right now as far as the revenue is concerned. It's scaling up nicely. So yeah. So that being said, going back to the announcement that were made earlier this year, since the end of the third quarter, I want to address maybe like 5 or 6 of them, like one by one. First of all, the financial center that we launched in Jiangyin at the end of September, right? So how does that fit into the whole Cubular Lending Hub ecosystem? Well, that financial center itself is, you can think of it as a smaller version of the nationwide ecosystem, right? So it's limited, the financial center is limited to businesses and lenders who operate in the city of Jiangyin. So just like the nationwide ecosystem, Lending Hub ecosystem, the small businesses give access to their data, and they can qualify for loans and credit from the participating lending institutions. Now, what's interesting about the financial center in Jiangyin is that this was an initiative of the city of Jiangyin. This was not us, basically. It's not like we stepped into the city of Jiangyin and say, hey, we're going to open this financial center. This was something that the city of Jiangyin took it upon themselves. They saw the Lending Hub operating in their city as part of the or planned nationwide operation of the ecosystem. They saw it operating, and they said, hey, you know what? Why don't we do something special here? Let's create a financial center specifically for the city of Jiangyin. And they invited financial institutions that do business in the city to lend based on the analytics and the AI that would be performed by the Lending Hub system. Now, just a quick update on that. Since the financial center launched at the end of September, we've had almost over 100 transactions. We were able to get a little more than 3,000 small businesses. By the way, there are over 200,000 businesses in the city of Jiangyin. So far, about 3,000 of them have registered to be part of the program. And like I said, we've done a few transactions. The backing of the government.
what 1% is of a growth is an impressive take up rate also. I mean, because if you look at the scale out, it's a massive number, and this is just what is it? A few months
Absolutely. Like I mean, the whole concept of the Cubeler ecosystem. Like I mean, there are no fees, right? It's free for small businesses to join, free for lenders to join. They only pay if they conduct a transaction, right? So they have absolutely nothing to lose and everything to gain. So that's why it hasn't been too difficult for us to expand our services throughout. We're primarily in the province of Jiangsu right now. So I mentioned Jiangyin, but we're also in the city of Wuxi. We started operations in Nanjing. We stepped out a little bit with some small operations in Xi'an, but primarily we're focused in the city in the province of Jiangsu for now. But we will be looking to expand our operations to other provinces. That's stuff that will come later on. So with the city, the update on the financial center is that things are going well on track right now for us, conducting transactions. Like I said, we had about 3,000 small businesses join the platform. And more importantly, we're also adding raw material distributors, manufacturers that do business with retailers in the city. So one of the announcements that we made was that we had the second largest steel producer in all of China join the platform most recently. So that was something that came as a result of the Jiangyin Financial Center.
You know what's interesting is that with these things, as you get more success, it just snowballs because things spread by like word of mouth. When somebody gets a loan through your platform, they tell their friends, and you have that or massive like viral growth.
Absolutely. Like, I mean, there is word of mouth. There are some marketing efforts that we're doing as well. There are a number of ways in which we can basically expand our operations, right? So the financial center in the city of Jiangyin, we expect that to be kind of like a template for us that we can use to replicate that concept in other cities. In fact, I didn't even mention that, but we have an agreement also with the city of Nanjing to replicate the Jiangyin Financial Center in Nanjing. So this is a way for us to port basically our services city by city and eventually get to a nationwide ecosystem of the Cubeler Lending Hub ecosystem.
Okay,
so
this is just one part of the growth story.
Right, exactly.
Okay, right. Very interesting. Okay.
The second thing I wanted to go ahead. No, I said the second thing I wanted to mention was the Gold River platform, right?
Yeah.
The Gold River platform, people need to understand the importance of that platform in the Cubeler Lending Hub ecosystem. Now, Gold River was a platform that was originally designed for raw materials trading, oddly enough. And this platform, we spent some time, energy, and a little bit of money, basically just getting the platform adjusted to be able to service various stakeholders. What I mean by that is not just raw material suppliers, but we've made adjustments in Gold River so that now if you are a distributor, you can actually upload your products into Gold River and make your products available to your retail clients. The retailers can also log into Gold River, create accounts, and purchase from a variety of distributors and raw material suppliers who are part of the Lending Hub ecosystem. Now, what's interesting about Gold River is at the end of the third quarter, I'm sure like your audience, a lot of our investors are aware of the outsourcing fees that we had in the third quarter, and that goes towards the profitability of the company. So I understand the concerns that people had when we came out with the third quarter numbers, and there was a huge number, right, in terms of outsourcing expenses. That was because we were outsourcing a lot of the services related to the supply chain financing services that we're offering in the city of Jiangyin. We're outsourcing that to a third-party company, and we're incurring large expenses. Now, what we have done is we started at the end of the third quarter, we started to transfer a lot of those services that were being outsourced to a third party to the Gold River platform, because Gold River is able to assume some of the services that were being provided by that third-party company. So more and more, as the weeks went on, we've started to do more and more transactions through Gold River and outsource less to the third-party company. So what that's going to do is, in the fourth quarter and then quarters to come, what you're going to see is that, yes, the revenues will continue to scale up, but you're going to see a significant decrease in the outsourcing expenses, which will make the company more profitable. So that's what's really important about the Gold River platform. The other thing is that right now the platform is really serving as the gateway for the distributors and the retailers that we're going to be doing business with. So the BDC deal that we announced a few weeks ago, which I'm going to talk about a little bit more about in a minute. BDC, their main interface to the Lending Hub ecosystem is through the Gold River platform. Same thing for the second distributor, BJM. Gold River is going to be their main interface. So we're going to continue to use Gold River as the main interface for all of our distributors that we're going to be doing business with, in addition to having it take over the outsourcing services that were being outsourced to a third-party company. So that's why Gold River is very important in the Lending Hub ecosystem.
Okay, so we're asking well, one of the part, they see that you have big revenues, the margins are maybe a little bit small. Now, I don't think right now Peak is really an earnings story yet. That might be 9 months from now. Right now, it's purely a growth story.
It's a growth, absolutely. Yes.
If you can just maybe address the margins, what are you going to be doing to increase margins? What's that outlook like?
Well,
and you see on the screen, Sang is asking about
percentage will the outsourcing. You know what? Based on our estimates, we expect the outsourcing expenses to decrease by as much as 30%, potentially more. But when I say significant, that would be significant. That would significantly increase the profitability of the company. So the decrease in the outsourcing expenses is one of the reasons why. There are other reasons, but it's one of the reasons why we expect the company to be profitable by the end of 2021.
Okay. Let me just address a couple of questions. So, we have a question about, what happens with people default on loans. If you, Johnson, if you can just explain your business model and that loan, why this doesn't really, does it affect you?
Okay. Well, that's an excellent question, because first of all, just want to make sure that the audience understands that we are not in the business of lending per se ourselves. We have a subsidiary that called Asia Synergy Financial Capital that does loans right now. They make loans to small and micro businesses, and but that's a very small percentage of our revenue. Most of our revenue comes from the fees that we charge the parties that use the application, right? So that's number one thing. The second thing is this is a technology platform, right? So the Lending Hub is an analytics and artificial intelligence platform. And one of the reasons why the company has been grown so fast is because the lenders that are on the platform, when they use the platform to extend loans, and they basically they notice a significant reduction in their bad loan percentages. And as a matter of fact, our ASFC subsidiary just received. Well, this is a scoop for your audience here, Jack.
There we go.
Yeah. So we recently received, ASFC actually received, I believe it's the highest rating from the government, because the loan defaults for ASFC were within, I can't remember what the exact percentage was, but ASFC had one of the lowest loan default rates in the entire province of Jiangsu, and that's largely because of the Lending Hub platform. So that being said, a lot of the lenders that use the Lending Hub platform significantly reduce their bad loan percentages, and that's why they keep using the platform. So to answer the question, it really does not affect us when bad loans happen, but this is one of the reasons why people use the platform, is because we minimize the bad loans for the lenders.
Yeah, I mean that's the value. Johnson, I'm glad
that's the value add, exactly correct.
Yeah. So it's not. they need to understand that Peak is not a bank. It's not a lender. It's purely a tech company.
We are, yes, we're a technology platform.
Data company.
Yes.
So Johnson ties into this question we have on the screen from Jeremy, which is, I think, a key part about the data. You have a lot of data, which is, obviously the data is valuable because, it's proving itself to be successful in helping these banks reduce what could be a multi-billion-dollar problem, right? So the data is worth a lot of money, and you're getting other data that's coming in. What are some of the ways that you're planning on monetizing the data? Again, we talked about this before, which is, I think, could be a massive revenue stream.
You know what? One thing I'll say about that, I'm not ready to speak to the specifics of how we're going to monetize the data that we have access to. But one thing I will say is that you look at companies, market research companies, right? Gartner, Forrester, IBC, some of the big market research companies in the world, right? If you try to buy market research information from them, you'll find out it'll cost you a pretty penny, right? So the more timely the information is as well, the more expensive it is, right? So if you're getting data that's like, a year old or 6 months old, you'll pay a price for it. But if you want data that's like a month old or a week old, it's going to cost you even more. We have access to valuable data, business data, economics data, and near real time, right? So this is just so that people understand how valuable this information is. The other thing is, yes, we're using that information right now to help banks and lending institutions minimize their default rates and also find the right candidates to lend to, right? These candidates that we're speaking of, okay, the 60,000 online retailers that have joined the platform now, who will be joining platform with the BDC deal, the 250,000 plus businesses from the BJM deal, all of these are Peak's clients, right? So they're giving us access to their information and they become clients of Peak, right? So by being clients of Peak, we have information into their business operations. We know what they need, what they don't need. So we can partner up with other service providers, insurance providers, investment providers. So there are a lot of opportunities for cross-selling opportunities, just using the information and being able to pinpoint what products and services would be best, more appropriate for our clients, right? Which are all these thousands of businesses that are on our platform. So that's just like one aspect of how we can monetize the data, but there are so many other ways in which we can monetize this information that I'm not ready to discuss right now, but that will come in the months to come.
Okay, Johnson, we got a couple people asking about warrant exercises. Warrant exercises and money is coming in. When are you going to do an uplisting?
Okay. First of all, I want to address the warrant question. There has been some selling pressure on the stock price lately. I think you mentioned consolidation. Call it whatever you want. But we do have a lot of warrants in circulation. There is also a debenture. We had a fairly unique product where we had this debenture that was not convertible, like in the classical term. The debenture was not convertible, but the debenture was issued along with warrants that could be used where you could use the debenture to exercise the warrants, right? So a lot of people basically took advantage of that. So those warrants were at 50 cents, if I'm not mistaken. So a lot of people surrendered their debentures in order to exercise the 50-cent warrants, right? So they benefited from that. And I think they turned around and some of them sold. Obviously, if they were able to get the stock at 50 cents, they're selling it in the market at like $1, $1.50. They're making double to triple their money, whatever, right? So there was some pressure coming from the exercise of the warrants. But on the other side, also there were quite a few warrants that were not attached to the debenture, that were just being exercised and generating cash for the company. So right now, all of the, I think, as I'm speaking to you today, all of the warrants that were attached with the debenture have been exercised. So that debenture has been completely wiped off of our balance sheet. which is a good thing. Plus, quite a few warrants have also been exercised to the tune of, I think we've had over the past couple of months, we've had about $7 million. $5 million, excuse me, $5 million worth of warrant conversions that have come into the company.
Okay, so it's a good position to be in. You get a lot of cash coming in.
Oh, absolutely, absolutely. So yeah, I mean, there are no complaints right now. We're in a good cash position, definitely. Now, also wanted to address the second part of the question about the uplist to the NASDAQ. This is something that I've been mentioning. We are doing the paperwork. We're just not ready right now at the stage to make a formal announcement for a move to the NASDAQ or the TSX. But we expect to be able to. It's obviously, like, I mean, something that we are pursuing and something that we expect to be able to achieve shortly. But we're just not ready to make an announcement yet on that.
Okay, we got a question about the AI. Zhongke, is correct? Zhongke, the AI.
Oh yes, yes.
What they're going to do?
Yes, the acquisition of Zhongke is software intelligence. Yes, it is very the acquisition is not complete yet. Obviously, we're still conducting our due diligence. We expect to close to make an announcement on the closing in the coming. Well, I wouldn't say in the coming weeks, because to do a thorough due diligence, it usually takes like more than 30 days, a couple of months and stuff. So we expect to close on the acquisition probably at some point in the first quarter of 2021. But yes, to answer the question, this is very important for us, very, very strategic for us. It goes towards building the Peak's IP portfolio, and also in terms of data, right? I mentioned the importance of the data. We're pulling information from the small and medium-sized businesses that are on the platform right now, and Zhongke has software that resides within the banks and the financial institutions. So they have a completely different data set that we would have access to. Now, obviously, like, I mean, we wouldn't be like selling information coming from the bank, but the data that would be coming from the bank's internal systems would help us make all of our systems more efficient and more accurate in terms of, like, predicting loan defaults and making providing more benefit to everybody that uses the lending application.
Okay, Johnson, about partnerships, with Beijing, Xinjiang, the big partnerships you announced last month. Any updates? What's happening? What kind of progress is being made there? And are there more deals in the pipeline?
Yes. So just to touch on the BDC partnership first, that's the consumer electronics distributor. Consumer products electronics distributor. And we announced that we had made the first transactions with them. And there's been a few more transactions since that announcement was made. We're closely monitoring those transactions. We haven't really opened the tap full blast yet. We want to make sure that we have a good understanding in terms of how these transactions come in, the rate at which they come in, before we do anything on a larger scale. So we're working right now with BDC on a marketing campaign to start targeting more of their 60,000 plus online clients, which we're going to start at the beginning of 2021. But for now, all systems are go. The integration work between the Gold River platform and BDC's systems has been completed. So there's a good data flow between their systems and our systems right now. We're just monitoring everything slowly before we turn on the taps full blast.
Okay. Let's see. Oh, yeah. Okay. We got. I think we have a problem with the sound. There's a little bit of on mine. I think it's on mine. There's some sort of feedback. Do you hear us feedback on your end, Johnson?
No, I'm hearing you fine.
Okay, something with the internet. Anyway, what else is in the pipeline, like, for the next let's call it 30 days between now and the start of the new year?
What's in the pipeline? there's one deal I wanted to talk about, one announcement that we made with regards to Grupo Coin, that Italian retailer.
Oh, the influencers, the fun.
Yes. What's important? Yes, what's important about that agreement? It's not so much the agreement that we signed with the Italian retailer. It's really the network of 55,000 plus social media influencers that we now have a relationship with, and we can leverage those relationships to allow retailers, Canadian retailers, U.S. retailers, and retailers essentially from all over the world to sell in China. And we would be providing financial assistance to the social media influencers, because oftentimes, like, they need money to put on the shows and to purchase samples or whatever, right? And sometimes they have to give the deposit. They have to give deposits to the retailers. So they have to make that investment in order for them to put together a show and to sell the retailers' products, right? So that's where we come in by providing the financing. But in addition to the financing that we're providing them, being able to leverage their influence to help retailers, Canadian and U.S. retailers, sell to the Chinese market, we feel would be a huge potential new revenue stream for us. Yeah. Okay, and this is something that we will be talking with Canadian retailers about, U.S. retailers about putting into place. So that's an expansion of the lending hub outside of China, if you will, and that's something that people can expect to hear more about between now and the end of the year. And also, we talked about online retailers, online portals, right? Such as Pinduoduo, Tmall, JD.com. Now, even TikTok, by the way, TikTok, which is a social media platform, they also have a lot of data on the sales of the social media influencers. So we're looking at potentially doing something with them as well. So those are things that could potentially happen between now and the end of the year. Okay,
we have a donation of $1 coming in for a new mic. They're saying it's a problem on my mic. Andy, thank you very much.
I'm sorry.
It means that they're watching the live. It means they're paying attention to what's being said here, right? So it's good.
I don't. Is it my microphone, Jack, or
what's that?
Is it my microphone?
That's something on my end, or the connection. Who knows? It's the internet's miss. I think I want to ask this thing with the influencers funding these live stream selling events. On your Twitter, you actually posted a picture of one of these customers.
Right.
Show, and if people see that, they can understand what's involved. Basically, there's like 5 people. It's a whole production. So that's why
it is. Absolutely. That's one of the things that we're doing. I can't remember. I think that show was in Hangzhou. So we started to send people basically to some of these shows with the influencers, right? So we can't go visit all 55,000 influencers that we've established relationships with, but we're starting to go to a few of their shows to get a better understanding of how these productions are put together, so that we have information to share with potential retail partners here in Canada and eventually in the US and the rest of the world as well. So get a better understanding what their needs are for funding, what their needs are for samples, what are the challenges basically to get a product from Canada to China. Those are some of the things that we're doing right now. We're kind of like doing our homework so that we're able to put this new line of business together. But again, I don't want people to think that we are diverting from the lending hub concept, right? This fits into the lending hub concept. It's essentially just expanding it. Yeah, it's expanding it. Basically, we're bringing now retailers from Canada, from the US, in order to allow them to sell into the Chinese retail space. But at the center of everything is going to remain the lending hub application.
No, I mean, it completely ties into everything. So, it makes sense. And it's interesting also in China, everything is kind of related. There's multiple products, everything working together. Like you see on the WeChat? Was it WeChat, the platform? They have all sorts of stuff on it. So it's pretty incredible. We got a question about the digital currency deal. Mr. B asking about the digital currency deal that you're doing.
Okay, yes, the implementation of the implementation of the digital currency is very important for us for a number of reasons. I think eventually, like China is very advanced when it comes to certain things. Okay, mobile payments in particular, and the countries let it be known that they want to move away from they want to become a cashless society, right? So it also gives the government better visibility into, like, the flow of transactions and so on and so forth, right? Because unlike Bitcoin or anything like or some of the other cryptocurrencies, the Chinese digital currency is it's centralized, and it's essentially managed by the Central Bank of China, the People's Bank of China, which is the Central Bank of China. So eventually, I think most businesses, if not all businesses, will have to adopt the Chinese digital currency. The fact that we were one of the first few platforms, to my knowledge, to allow for transactions in the digital currency gives us that kind of like first mover advantage, and it allows us to get out there and tell our clients, hey, listen, you know what? We're at the cutting edge of technology. We're at the forefront of the future of transactions in China. You're also going to get better rates if you basically settle your transactions in this digital currency. So we're also encouraging a lot of the small businesses to open accounts, digital currency accounts. So we're looking at working with banks, the Postal Bank of China, which is one of our partners for this relationship, to be able to refer clients to them to open accounts, digital currency accounts. Eventually, all banks will offer that, but for now, there's an opportunity basically for us to take advantage of the fact that we're one of the first to offer the service to the market.
Okay, so it's interesting. It's we had the presenter that came on before you, which was CloudMD, and you guys actually kind of started on a platform right around the same time, and both stocks pretty much went up, close, almost like 4x, 5x, and now they've consolidated a little bit because it's very similar, because they had warrant exercises, fund financing. You had warrant exercises,
right?
So all these things, they do pressure the stock, so puts pressure and consolidates until all that stuff washes out, which I think we're seeing. I think we're at the end of it with both stocks, because we're seeing really the stock's not going. It's like kind of it's holding steady. And the company keeps making progress. So I think very similar to with Cloud, it seems like Peak is also at that inflection point right now. The real inflection point is what's going to happen between now and 21. So we're going into, I think that's the key story. So investors, I think, need to have some patience. It's everybody expects now. I think they want the stocks to go 10x, in like 2 hours now. Used to do.
What I tell people.
A few years they would wait. 10 years.
What I tell people, Jack, is like, I've had people basically complain. The stock was trading pre-consolidation. It was trading around the 2 cent mark, which was around 20 cents, right? Like post-consolidation right now. And a lot of some impatient investors and shareholders were talking about, hey, what are you doing to address the stock price and everything else? And what I kept telling people at the time was, hey, just let us build the fundamentals of the company, right? Let us build the fundamentals of the company. You're going to see revenue growth. You're going to see profitability eventually, and everything that we're doing right now. Well, the stock has responded, as you mentioned. We're certainly nowhere near 20 cents right now. So the stock has responded. Now we've reached another level where, again, people are like, okay, what's coming up? What are you doing? What are you doing to address the market? The stock has been stagnating. And I'm going to tell people the same thing. Listen, we're just getting started here with building this company, from the ground up. The fundamentals are good. Yes, we had some interesting deals. There are more deals that we're going to be announcing. The revenue rate that we're on right now will more than likely, we know the revenue rate will increase. The company will be profitable at some point in time. We talked about migrating from the CSE to the TSX, from the OTC QX to the NASDAQ. So there are a number of things. There are a number of things that we're doing which will put the company in a much different position. Call it like a quarter from now. By the end of the first quarter of 2021, I totally expect certain things to happen, which will take the company, which will make it evident to people that we're no longer a company that should be trading. I don't look at the stock price on a daily basis. So I don't even know what it's trading at right now. But I certainly expect that we will start to get the revenue multiples that some of our peers in the fintech space are getting, which is what we're absolutely not getting right now.
We got Hanny asking, will the account be able to keep up with exponential growth, as you expand in the cities and everything else you're doing?
Do you count on onboarding more in-market experts? That's a very good question, Annie. Yes, great people make great companies. And we have been surrounding ourselves, like we've been building, as we have been building the fundamentals of the company, we've also been building the management of the company. So we've brought along a couple of advisors that are experts in capital markets. Obviously, they've helped with some of the things that we've done on the capital market sides. Of things to get the stock price to the level that it's at right now. We're also consulting with them for the upcoming uplistings to the TSX and NASDAQ. We're also looking at a potential uplisting to the Hong Kong Stock Exchange. So yes, we are bringing people with their certain expertise that will continue to contribute to the company's success. This is in Canada. In China, we've made a couple of announcements, right? So the digital currency, I forget the gentleman's name, the digital currency implementation that we did, that was because we brought on an advisor that was a former manager at the Central Bank of China. We have a couple of key people that we've also added to a management team. There's going to be more announcements about that in the coming weeks about how we're building the team over there in China as well. So yes, we are addressing the personnel in order for us to get to another level with this company.
Okay, Justin's asking about, was it Jin Shahar, right?
Okay. Has the Jin Shahar revenue model been completed, and when can we expect to see revenue coming from? Yeah, the model of Jin Shahar, I think I mentioned on one of the previous appearances that we were tweaking the revenue model of Jin Shahar. So Jin Shahar was charging a fee, right, to the loan brokerage companies in order for whenever there was a match of one of their leads. So there was a fee. We are still charging a fee for that. But what we're doing with Jin Shahar is we're actually working with financial institutions in Jiangyin, Nanjing, and some of the other cities in which we operate. They're actually talking about customizing products, financial products, loan products, to be exclusively made available on the Jin Shahar platform. So this is something that is, I can't stress the importance of that. This would be something that would be a complete differentiator for us. I mean, if you can go to brokers, if you can go to clients and say to them, hey, you know what, this particular product, whether it's the interest rate, whether it's the term or whatever and stuff like that, the fact that the financial institutions are now customizing products specifically for the Lending Hub clients to be offered through the Jin Shahar platform is going to be an important selling feature for us. So we will be looking to do a pilot project in 2 cities with these customized products, if you will. We're looking at doing something in Nanjing and potentially in Jiangyin as well, with the 2 financial centers, which Jin Shahar is closely tied to right now as we speak.
Comment here that if you do list on Hong Kong, there's going to be a lot of buying in the stock.
I see somebody that the person mentioned that we are a competitor. I really don't see us as a competitor to Ant, to be honest with you.
Totally different, actually. That's why.
Yeah. Ant is different. Like, I mean, I touched on some of the nuances the last time. I don't want to get into it right now, but yes, Hong Kong is definitely a target market for us. We fully expect that there would be a lot of, we know for a fact that there are a lot of investors that would be interested in the company. Hong Kong, China, Shanghai, Wuxi, Jiangyin. Like, I mean, it's just like, a short flight away, right, for people in Hong Kong basically to to visit our operations and talk to some of our folks over there. So we totally expect Hong Kong to be a huge, a very important event. A listing on Hong Kong could be an important event for us. As far as Ant is concerned, again, we don't see Ant as competitors. In fact, we think that there will be, possibilities. If it ever happens, there would be possibilities for us to eventually work together with Ant as partners as opposed to competitors.
Okay. Okay. So, Johnson, I guess let's kind of wrap up. In terms of news pipeline, you basically, I think you basically said stay tuned for the next.
Well, I mean, absolutely. Like, I mean, we've been putting out news like pretty much like every week, right? Like, I mean, there are a lot of things happening with it.
Well, our audience needs it daily. They need big news every day.
Exactly. They need news every day.
Daily news.
Daily news. No, like, isn't that a show? Like, no, with I think the Daily News with Jon Stewart or what? No. We're not planning on putting out news daily, but we do there are significant events that we expect will occur between now and the end of the year, and we will certainly continue to keep our shareholders informed as to what's happening with the company. So yes, there our investors and shareholders can expect news probably like every week between now and the end of the year because of the things that we have going on right now.
Okay, I mean, things in the pipeline. Bottom line. Okay, so Johnson, let's wrap up. Our favorite question. Top 3 reasons, in your opinion, why investors should want to own Peak right now.
I'm going to sound like a broken record, Jack. I keep coming on your show, and I say
now. It's last time.
Okay? Yeah, no, the number one thing is as I can't remember the gentleman name that mentioned it earlier. Great people make great companies, right? So the number one reason is the team that we've managed to put together. We have a fantastic team here in Canada and also in China, right? So, and we keep adding more and more quality people to that team. We've taken the company from $1.6 million in revenue 2 years ago. We're on pace to exceed 40 million in revenue right now. We would not have been able to do that and execute our plan if we didn't have the people to execute that plan. So the number one reason is we have the team in order for us to take the company to where we think it can go. The second thing is just the space itself, right? I mean, people are talking about like Ant Financial, right? They're comparing us to Ant Financial. Ant Financial is a company that's worth what? They weren't able to. I don't think they were able to proceed with their IPO. So officially, we don't know. They don't have a public market cap yet. But I think by all estimates, people estimate. I think it was what, $300 billion or something like that. All these
numbers are just,
exactly. So the second reason is really like the space that we're in, right? We are in a space right now. We're in China. We're in the fintech space. There are tremendous opportunities, and the revenue growth that we talked about, the eventual profitability. We're just scratching the surface of the potential behind this company here. So that's the second one. That's the second reason, right? The potential behind the company. The third is we're just undervalued, right? So we talked about Ant being worth X billions of dollars. Peak right now is barely trading at what, 3.5 maybe times this year's revenue, not even mentioning next year's forecasted revenue. So as far as I'm concerned, those are 3 very, very good reasons in order for people to take a serious look at the company right now.
I gotta ask you one last question because Hanny is making a $1 donation here, so we gotta ask this. We're forced. What's happening to the adoption rate? How's it going?
Oh yes, that's a very important point that Annie brought up. As I mentioned earlier, we are monitoring I'm assuming he's talking about the BDC deal. All right, so the BDC's got 60,000 online shops. And we all know the revenue potential behind that transaction for us, right? But the key is going to be in how quickly we're able to get those 60,000 shops on the Kubler lending hub and have them basically start requesting funding, right? So one of the things that we're monitoring right now, without the benefit of the marketing campaign that we started, just BDC going out on their own and just kind of like letting it be known to their clients that, hey, you know what, we have the service. So far, what we're seeing from BDC, they're telling us that about 80%, okay, 80% of the small businesses that they've mentioned this program to said that they want to be part of the program. They have either registered to be part of the program, or they're very interested to be part of the program. So
it's a huge
it is a big number. Listen, I'm not suggesting that 80% of the 60,000 small businesses will be on the platform within the next 6 to 12 months, but it really bodes well as far as the adoption rate is concerned. So
okay.
We're looking forward to starting that marketing campaign in early January.
Yeah, that shows some serious interest. Okay, Johnson. On that note, I want to thank you everybody for joining today's live stream. Thank you, Hanny. Everybody's with the super chats and everything.
Yeah, he was great.
And we'll see you on the next live stream. Thank you again, Johnson, and everybody today.
All right, see you next time, Jack. Thanks.